This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
U.S. oil production is poised to set a larger record this year than prior estimates, the U.S. Energy Information Administration, EIA, said on Tuesday in its short-term Energy Outlook report, but it maintained its estimate for demand growth. The EIA said it now expects U.S. crude oil production to average 13.59 million barrels per day, BPD, in 2025, up from its prior estimate of 13.55 million barrels of oil per day. The agency held its estimate for U.S. consumption of petroleum and liquid fuels steady at 20.5 million barrels of oil per day in 2025.
Decisions made by oil producer group OPEC take a long-term view of the global markets and are aimed at providing price stability, Secretary General Haytham Al-Ghais said at the India Energy Week conference on Tuesday. The comments came after U.S. President Donald Trump repeatedly called on the producer group to increase oil production to help reduce prices. The Organization of the Petroleum Exporting Countries and their allies, a group known as OPEC+, said earlier this month that it would stick to its policy of gradually raising oil output from April.
Moving on to the top news in the energy sector.
President Donald Trump's Energy Department said on Tuesday it approved the disbursement of a loan guarantee that had been finalized days before he took office to Calumet for the expansion of a sustainable aviation fuel refinery in Montana. The Montana Renewables refinery in Great Falls opened in late 2022 and produces about 140 million gallons a year of biofuels. The loan will allow it to expand production to 315 million gallons per year and produce about half of North American SAF, a fuel made from fats from seed oils and tallow that is lower in greenhouse gas emissions than conventional jet fuel. President Joe Biden's administration had finalized the loan on January 10.
Oil prices edged down on Wednesday as an industry report showed an increase in U.S. crude stockpiles and tariff worries weighed on sentiment, though stronger refining margins limited the market's downside. Brent futures fell 25 cents, or 0.3%, to $76.75 a barrel by 0408 GMT, while U.S. West Texas Intermediate, WTI, crude dropped 28 cents, or 0.4%, to $73.04 a barrel. The decline snapped a three-day streak of gains for prices, with Brent climbing 3.6% while WTI rose 3.7%. Crude oil stockpiles in the U.S., the world's biggest oil producer and consumer, rose by 9.4 million barrels in the week ending February 7, according to sources citing American Petroleum Institute data on Tuesday. Next, we have the top news in metal market. Prices of industrial metals in the U.S. extended gains on Tuesday, reflecting the impact of U.S. President Donald Trump's 25% tariffs on steel and aluminum as industry will struggle to source enough domestic material. While the stated goal of the new tariffs is to aid struggling U.S. metal producers, it will take time to reopen closed plants and build new ones to compensate for large amounts of imports. In the meantime, traders are marking up U.S. metals prices to reflect the price automakers and other industries will have to pay for foreign metal when the measures take effect on March 12.
Iron ore futures rebounded on Wednesday, as investors shifted focus back to worries over potential supply disruptions from major producer Australia and prospects of growing demand in top consumer China. Prices slid by more than 1% on Tuesday, hit by U.S. President Donald Trump's fresh tariffs, which will take effect from March 12. U.S. President Donald Trump substantially raised tariffs on steel and aluminum imports on Monday to a flat 25%, without exceptions or exemptions, in a move to aid the struggling industries in the U.S., while risking a multi-front trade war.
We will now look at the top news in the agricultural sector.
Sugar consumption in the United States in the 2024-25 season will fall to 12.48 million short tons, the U.S. Department of Agriculture projected on Tuesday, 75,000 street less than estimated a month earlier and 2.7% below the amount used the previous year. If the USDA's projection is confirmed, it would be the third consecutive annual decrease in sugar consumption in the U.S. Declining sugar demand has been a hot issue among sugar market participants, particularly in the U.S., due to the increasing use of GLP-1 drugs to reduce obesity.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.